This is Cashflow Ninja, episode 297 with Keith Neumeyer.
Producers and creators are the sources of all value on the planet. MC Laubscher, the host of the top-rated business and investing podcast Cashflow Ninja, is on a mission with Producers Wealth to help producers create, protect, and multiply their wealth outside of Wall Street in any economy by creating systems and processes that help them increase their production, provides them with liquidity, passive income generators, and opportunities for enormous growth. Learn more about their time-tested and proven systems at yourownbankingsystem.com. That's yourownbankingsystem.com.
Welcome to the Cashflow Ninja, the podcast sharing how to create income streams and manage, multiply, and protect your wealth in the new economy. Here is your host inside the dojo, MC Laubscher.
Hello, Cashflow Ninjas. MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today, and in today's show, we're going to look at how to identify opportunities and invest in the mining sector. My guest in this episode is Keith Neumeyer. Keith has worked in the investment community since 1984. He began his career at a number of Canadian natural brokerage firms. Keith moved on to work with several publicly traded companies in the resource and high technology sectors. His roles have included senior management positions and directorships responsible in areas of finance, business development, strategic planning, and corporate restructuring. Keith, who has an unparalleled track record, which includes creating two world-class mining companies, First Quantum Minerals, has now grown into one of the world's largest copper producers, and First Majestic Silver Corporation, which is one of the largest silver producers in the world. Keith has also listed a number of companies on the Toronto Stock Exchange, and as such has extensive experience dealing with the financial, regulatory, legal, and accounting issues that are relevant in the investment community. Keith Neumeyer is currently also serving as chairman of First Mining Gold. Keith is an expert in market cycles and identifying overvalued and undervalued assets. He called, for example, the top on Bitcoin. He has put together a free report for Cashflow Ninjas where he lays out another opportunity that he has identified and positioning himself to capitalize on this opportunity. You can access this report at cashflowninja.com/first mining. That's cashflowninja.com/first mining. My friend Dave Zook from The Real Asset Investor says you can be conventional or you can be wealthy. Pick one. The Real Asset Investor team creates value for investors looking for high yield returns from multifamily apartments, ATM machines, and self-storage investments. Their syndications offer attractive investment opportunities that produce strong cash flow, equity growth, huge tax incentives. They are truly passive and managed by a world-class team. To learn more about the exciting investment opportunities the Real Asset Investor offers, such as their multifamily, ATM, and self-storage syndications, please visit cashflowninja.com/real asset investor. Keith, welcome to the show.
Thanks, MC. It's nice to chat with you today.
Can you please share a little bit about your background and journey with my listeners?
Well, sure. It's, I've been doing this for a long time, about 35 years. And, when I mean doing this, I mean being involved in the financial markets. It's my passion, I guess, for numbers, my passion for finance, my passion for rocks. It all kind of came together, and I started off in the 80s, early 80s, working for the banks. I traded equities between Toronto and Montreal and NASDAQ and Vancouver, and arbitraged from my own account with the bank's account as well, and had some fun, made some money, and the crash of 87 occurred, when everyone knows the crash. Well, maybe some of the viewers today may not have been around during the crash, or maybe they're too young to remember it, but I was on the floor that day when it happened, and it was a pretty exciting time. Dow Jones down 25% in one day. It's pretty interesting, and it bankrupted a lot of people, bankrupted a lot of brokerage firms, were left holding the bag with people that couldn't pay their accounts, couldn't pay their losses. And it was interesting. Within a year of that, the Canadian financial system changed quite a lot, whereby the banks were allowed to start buying up the brokerage firms, because prior to that, there was the banks and the brokerage firms were different, or were not allowed to be part of the same business. So that changed. Just a lot of people lost their jobs in 89, 90 in the banking sector in Canada. I was included in that mass layoff across the country. In 90, 91, I started working for publicly traded companies, mostly in the corporate development and investor relations side of the business. And then in 1992, I put together a company called First Quantum Minerals, or at least it was in the early days of putting it together. It wasn't named First Quantum until 1994, but conceptually the idea was being formulated at that time. And by 95, 96, we acquired our first assets, and by 97, 98, we're breaking ground, and by the end of 98, we're in revenue for the first time. And I left that company in 2000, mid-2000, and today it's one of the largest copper companies in the world. I think it's got a market cap of somewhere around $10 billion. So, obviously a very sizable company. In 2002, I was kind of in semi-retirement from 2000 to 2002. This was during the tech boom, when the NASDAQ was, hitting all-time highs, and the internet bubble was in the process of building. Another very exciting time to be in the market, as is today, obviously. And then I saw the mining sector start to turn around, because from 98 to 2002, the mining sector was in very bad doldrums. There was a hate on the industry, very similar to what it is today, quite honestly. And I saw gold starting to move, and I decided, I came from a copper company. I like gold, but there was a lot of gold companies out there, and there was very few silver companies. There was really only a handful of pure silver companies. And coming from a copper company that was really much an industrial metal, silver made a lot of sense to me, because, it is very much an industrial metal. So I decided to put together a silver company. And we hit the road pretty hard, 2002, 2003, we were raising all this seed capital. 2004, we acquired our first asset, which was the La Pria silver mine. And then by mid-2006, we had 4 mines in our portfolio. And then by 2010, we had hit, by 2012, 10 years later, we hit 10 million ounces of production. And today we're around 17 million ounces of production. We're just doing our acquisition of our 7th mine currently. That should close in the next 2 to 3 weeks. And that's going to take us up to somewhere around 30 million silver equivalent ounces of production. So we almost double in size, effective within about 3 weeks. We go from about 4,000 employees to 6,000 employees. So it's a big chunky acquisition, our largest acquisition, actually my largest acquisition in my career, which is pretty exciting. And then going back to 2014, just backstepping a few years, I put together a company called First Mining Gold. It was actually called First Mining Finance at the time, but we just recently renamed it. I'll talk about that in a couple of seconds. But, I saw the similarity between First Quantum and the similarity between First Majestic was the fact that I was able to put together these companies at the bottom of the market when no one really cared about mining. So it was easy. Well, not so much easy, but at least picking up assets was easier than it would, of course, be in a bull market. So assets are more available. Assets are cheaper, obviously. So to me, I've proven in my career that I'm a really good buyer of stuff, and so we decided to start accumulating assets for this new company, which I'm the chairman of. I am the founder. I don't run day to day. I've got a management team that runs the day to day. I've got First Majestic as my first, priority, and First Mining Gold obviously is become a pretty interesting company, because over that period of time, from 2014 to 2015, well, it went public in April 2015. So from April 2015 to the summer of 2016, we ended up buying 8 public companies, or 8 companies, and of which, sorry, a message just came up on my computer. Over that, and we became, today we have, since that time, 25 different projects, of which, 5 of them are in Eastern Canada, and they're really world-class, really exciting gold projects. And, now from First Mining Finance was really kind of an incubator type company. And we, as the market developed and as the market has improved, because the market today for mining stocks or the mining sector is much better than it was 2-3 years ago, we actually changed the entire business plan of First Mining Finance to become a developer versus an incubator. So we changed the name to First Mining Gold. We put in a new CEO. He's a developer. He's built companies. He's built mines before. We really needed to change management out to have the new skill set required to advance the company to the next stage. So they're now developing the core assets, which we can talk about throughout this interview. And we're looking to hopefully see First Mining Gold become a producing gold company in the next few years.
You've touched on your philosophical approach a little bit of purchasing very undervalued assets. Can you elaborate a little bit more about your approach to picking up and investing in asset classes, and also in your philosophical approach to wealth creation?
Yeah, look, it's the mining sector is extremely cyclical, and it is something you could really make a lot of money at. If you're investing properly, it's something you could lose a lot of money at if you're not investing properly. Mining is very a boom or bust. We go through these seemingly 10-year cycles where the metals go through periods of extreme lows, and then the metals go through extreme highs, and it's because the miners they have to use the markets during those high periods of time to raise the necessary capital to do the investment in exploration and development in order to produce ounces and or pounds, whatever the metal may be. But they can only do that in a high price environment. So when the low prices come, and they always inevitably do, the investment in exploration and development drops off substantially worldwide. So production starts to drop. And then that's what we're seeing right now. So over the last 3 years, we're actually seeing the mining sector produce less zinc, less lead, less silver, less copper than what was produced 3-4 years ago. And that's got a direct relationship to investment. And as the market supply-demand fundamentals change, which they are now doing, the zinc market, the copper market, the silver market, they're all becoming very tight now. So over the next few years, we're going to start to see metal prices start to climb. We've already seen nickel and zinc and lead and already climbed dramatically over the last 12 months, and those moves are going to continue. I expect to be seeing those moves in silver and copper as well over the next year or two. And as these metal prices go up, then of course a company like First Majestic Silver or other mining companies can start to invest capital again. So as that occurs over the next 3, 4, 5 years, then productions can start to go up again. So that's where you get the cyclicality. And as an investor, if you can catch that right, you can make a lot of money. And I just happen to be very good at it. And during these low price environments, I've been able to go in and acquire great assets. I built First Majestic Silver as the second largest silver producer in Mexico, and Mexico's the largest silver producer in the world. And that was done because I was able to pick up assets on the cheap, and then I duplicated that with First Mining Gold. You couldn't do what I did today in First Mining Gold because the prices of these assets today are 2 to 3 times of what they were back in 2014, 2015. And I don't think probably in the rest of my career I'll ever see prices again that would match the lows that we've seen over the last 3 years. When it comes to investing philosophy, I have to kind of I'm a professional investor ultimately, right? I'm
Right.
the CEO of First First Majestic Silver. I'm the chairman of First Mining Gold, and ultimately my responsibility is to invest shareholder money and my money, because I'm a big shareholder of both companies, in a way that is going to make shareholders money. So because that's ultimately my responsibility.
Right.
So how do I do that? I can't, as a trader, I came from, I've got trading blood in me from my times on the stock exchanges in the 80s. So I probably know markets better than most people, most CEOs. So I'm a very patient investor. So I know enough, not to buy assets at the top of the market and then get blown up trying to finance them at the bottom of the market and blowing the share capital out the door, so that, none of the shareholders who own any of my companies can ever make a penny, because there's, been the whole share cap's been blown up because the timing of the acquisition was poor. And I've seen that time and time again with many companies where they get greedy, they start chasing assets and they pay too much for them, and then down the road they blow themselves up because they run out of money, and in a lot of cases they go bankrupt. I've never done something like that, because value to me, or price to me, is extremely important. And I'll weigh this asset that we're doing right now, or this acquisition, pardon me, that'll be closing in the next 3 weeks, that I referred to previously. I've had my eye on that mine for 10 years, and I've tried buying it 3 times over that period of time. The third time was successful.
These things don't operate in a vacuum. You've mentioned about these market cycles, and obviously it plays into the environment that it finds itself in, which ties into geopolitical events, the economy, and so forth. And commodities, and more specifically gold, has always been kind of a safe haven for investors. I believe it was Ray Dalio that said that he who doesn't own gold doesn't know economics or history, right? Or something to that effect. What is your current view and outlook? You've touched on where you think we are in the market cycle. Tying into that, what's your current view on the global economic climate, markets, and then also all these geopolitical events that play into it? Is there a lot of uncertainty? What's your take?
Well, look, I don't like to see gold move on geopolitical events, and that's why, and I don't own gold for that reason. I own gold because it's the ultimate currency, and with it's just like owning U.S. dollars or francs or euros. It's I've got all of them. I own a variety. I own a basket of currencies, including gold, and I look at gold as a currency. So, I think that it should be in everyone's portfolio. If you go back, 20, 30, 40, 50 years, gold has been really the best performing asset, on an inflation adjusted basis. And then I don't expect that's going to change. It'll be like that for forever, I would assume. But I think we're going to get into even a much more interesting place whereby, I'm not sure if you or your listeners or viewers watch Jim Rickards, but he has a view that the total value of gold, converted into the total amount of debt on a global scale, would require the repricing of gold to be somewhere in the order of $10,000 per ounce. And then you see a lot of governments around the world buying gold. There's been more central bank buying of gold in the last 5 years than there has been in the last 30 years. So they're summing up. These central banks wouldn't be huge buyers of gold if there wasn't a reason for it. So I think they're telegraphing the market. They're telling the market what is going to happen. The timing is somewhat subject to debate, and we know none of us have a crystal ball, but I do believe that with the amount of debt that's out there, it just can't be fixed. There's no way any of the governments can pay off their debts, and the only way they can reset the system is coming up with a new system. And I think there will be a major financial crisis similar to the one we saw previously in 2008, 2009, but I think it's going to be worse. And when that happens, it's going to be kind of the setting stage, for this new reset. And I think that, gold will be likely part of that new reset. Whether that all means, I don't exactly know, but, I'm fully invested in the mining sector, and I've got a lot of physical metals.
Right. There seems to be a little bit of a kind of a disconnect with the ratio between gold and silver. There's always kind of been a historical ratio. Any comments on that for our listeners? And do you see the ratio changing?
Yeah, it's interesting. I have debates with people all the time about the ratio, because I personally think the ratio is very important. Other people, tend not to think it is. So there's a bit of a debate on the importance of the ratio. But, what I look at when I put First Majestic together, the reason why I did it is because of supply-demand fundamentals of the metal. I looked at silver specifically because, coming from a copper company, I kind of programmed that way. And I just thought it was so compelling that I had to put together a silver company. And it's interesting. You couldn't drive your electric vehicle without silver.
Right.
Think about that for a sec, right? So what is an electric vehicle? It's a computer sitting on a stack of batteries. And this computer consumes 3 times more silver than a normal fuel combustion vehicle. And all these automobile companies want to be producing millions and millions of these electric cars over the next 10 or 20 years. Well, how are they going to do it without silver? And of course, copper too. The other, silver and copper are the 2 key metals that everyone should have in their portfolio.
Right.
I'm very bullish on both of those metals. But, you can't mine a Bitcoin without silver.
Right.
It's kind of hilarious if you actually think about it.
It is.
There's an announcement out today, a big solar farm that's being built. The Saudis came out with a release just about a month ago where they're building the largest solar farm in ever to date. And my VP Corporate Development did the calculation on how much silver is going to be required, and he came up with a number of 600 million ounces of silver over a 20-year period needs to be acquired to build this solar farm. So you just look at the supply or demand of silver, and it's just over the top, and it hasn't shown up in the markets yet. So we're trading in this 80-to-1 ratio, which quite honestly is silly. And if you go to our website, firstmajestic.com, and you look at our PowerPoint presentation, there's an interesting graph there that shows you the ratio and how it's moved over the last 20 years. And every time it hits 80 approximately, it crashes. It can stay in the 80 range for a year or two, and then all of a sudden, things change, and then it starts to fall. Last time it went from 85 to 31 when silver hit $50, and I think next time it's actually going to get down to even a much, much lower ratio. We're mining as an industry worldwide. I think about this for a sec. For every 1 ounce of gold we're mining worldwide, we're only mining 9 ounces of silver.
Wow.
Yeah, so that's just nuts. And if you asked scientists, how much silver is in the Earth's crust, they'll tell you compared to gold. They'll tell you for every 1 ounce of gold, there's 16 ounces of silver in the Earth's crust. But we're only mining 9-to-1. So if there is 16, we're not finding it. But how do you have a 9-to-1 ratio and trading an 80-to-1? It makes no sense. So, I buy physical silver every year. I'm going to be buying more. And, it's just, I'm excited about being the CEO of a silver company, but it's just simply not showing up in the marketplace. We have a complete disconnect right now. But I think that creates the opportunity, quite frankly.
You're listening to Keith Neumeyer on the Cashflow Ninja podcast.
Laubscher
we'll be right back after a word from our sponsor.
Business and investing podcast, Cashflow Ninja, and also the president of Producers Wealth. Producers Wealth assists people in creating, protecting, and perpetually multiplying wealth in any economy through creating processes that help them increase their production, provide them with liquidity, passive income generators, and opportunities for enormous growth. Learn more about their time-tested and proven systems at yourownbankingsystem.com.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the United States. Our simple, proven system will help you create real wealth and passive monthly cash flow. Learn how to find the best deals by downloading your free copy of The Ultimate Guide to Passive Real Estate Investing at noradarealestate.com. That's NORADA realestate.com.
You're listening to Keith Neumeyer on the Cashflow Ninja podcast, and now back to our interview. Let's touch on the mining sector for a little bit, and I think this would be very interesting for my listeners as well, because we haven't covered that on the show, and it's a very, very interesting space. Most people probably saw the movie with Matthew McConaughey. I believe it's called Gold. Yes. But it's something to that, and a lot of these projects start, but the statistics, I think it's like 1 out of every 3,000 projects, they actually reach production. Can you elaborate on that a little bit and give us a little bit of a background on the industry itself?
Yeah, look, it all starts with exploration. And right now, on a worldwide scale, there's really not a lot of exploration going on because the junior miners just can't raise the capital. It's very tough right now. For First Majestic, we wanted to go raise $100 million. We could do it in a heartbeat, but and this year, we're drilling 180,000 meters of drilling in Mexico, the largest drill program ever in the history of the company. So for the big companies like ourselves, we can do it. For a smaller company like First Mining Gold, they have to be a little bit more careful. Because capital is always difficult to get. So, they have to time their exploration programs around fundraising. And in the case of First Mining Gold, they've got, over $10 million in the bank. So, they're okay for the next few years. But, if they had, 20 or 30 or $40 million in the bank, they could drill a lot more and a lot more quickly. But if the money's not available, which is just simply not available today, they have to be very nimble and just spend their money wisely, but at the same time develop their assets. But there's many junior companies that have no money. Here in Vancouver, there's 3,000 mining companies, of which probably only 20 or 30 of them are producers. The rest of them are exploration companies in varieties levels of development. Some very small and some bigger, obviously. In Mexico, where we're active First Majestic's active in, there's something like 300 mining companies, Canadian mining companies, active in Mexico exploring. Now, they're all not exploring right now because most of them don't have the money to do it. But they're there, they own property, they're ready to spend the money, they're ready to explore if the markets would open up and give them money to finance exploration programs. So, this goes back to cyclicality, right? And, finding gold and silver is very tough to do. They're very rare metals. But of course, if you're successful as a small little junior company exploring, and then you hit gold or whatever, your shareholders can do pretty well. So, there's a lot of entrepreneurs that run these little juniors that have that wish, like the movie Gold. That hope for that day when they pull that great hole and they've got their mother lode discovered. It doesn't happen very often, but when it does, it can be exciting.
Yeah. Now, how do you guys, and you specifically, what does the process involve sifting through projects? Because obviously you have a team of scientists and folks in the space that bring and gather projects for you. Which ones, can you just talk a little bit about the process of sifting through this and which one you're pursuing and or not?
Yeah, look, I'm not a geologist. I'm a finance guy, but I've got a lot of, geos and engineers around me, good friends of mine, people that I've worked with for years. I've also got access to other talent, if necessary for special types of due diligence programs or any kinds of special issues that I need to investigate. I've got access to a lot of people to do that. And, when I first thought of the idea back in 2014 to put together First Mining Gold, I needed to obviously access some of my contacts and presented my plan, and then basically gave them the job to go and sift through all the data, over the last 20 years and figure out, who out there is worth, acquiring. And, we had no criteria at that point. We just said, let's broadly look at the marketplace and see what's out there. And so we created that database of companies. Then we started breaking it down. We said, okay, well, anything over a million ounces of gold, over one gram per ton, which is the grade, the amount of gold that's in a particular ton of rock, because grade is important. Tenure, land tenure. So, what jurisdiction? If you're in Guatemala, we know what can happen. If you're in Venezuela, we know what can happen. And I don't want to be doing business in China or Russia, or places like that where, the rule of law, may go against you. I want to be in jurisdictions that I could rely on the court system, if there's an issue. So it's got to be, so there has to be real title availability. So that's very key. And then of course, land access. So, indigenous groups, Native Indians, First Nations, what's the relationship, with those groups on the ground, communities, and because land access, if you can't get access to your land, it doesn't matter what's there. Forget it. You'll never get it permitted. And then permittability is the last thing. So all that has to check the box, and the last one is permittability. How easy is it to permit? And Eastern Canada is a very easy place to permit gold mines. Many parts of the United States are easy as well. Arizona, Nevada, these places were a big focus of ours. But California, Oregon, Washington, forget about it. You'll never get a mine permitted in any of those states. So even Alaska is difficult. So there's lots of places we avoided, and so we broke down that list. We actually ended up with a list of about 60 companies, and then we went through that list and we broke it down even further by throwing a higher criteria at it. And we came up with our top 10 list, and then we finally got public in April of 2015. And we started approaching all these boards of directors and saying, hey, look, this is our plan. Why don't you join a bigger team? Come under our umbrella. You've got no money left in the bank. You're almost bankrupt. You're about to turn out the lights. It's going to make a lot more sense for you and your shareholders to form a larger group. And I was able to convince a lot of boards of directors to merge with First Mining and become part of our team. And these assets that we acquired were run by really good people that developed these projects over a 10 or 20 year period. Multi-million ounces of gold drilled, in the ground, but they just simply ran against the wall. They ran up against a really, really bad market, and they couldn't raise the capital to really stay alive. So by putting all these companies together under a single umbrella, it became very financeable, which we did. We raised quite a lot of money for it, and we're here today now, developing the assets. So it's pretty exciting what we did.
Yeah. Can you elaborate on a couple of exciting projects that you guys are working on currently and developing?
Sure. Well, the biggest one is Springpole.
Okay.
That one, it's interesting because the Geo is that ran that. He's actually the president of a company called Novo, which has had a huge discovery in Australia. And he discovered this project in Northern Ontario, and over a period of 10 years. It was discovered about 20 years ago. And then he came up with a new geological theory, and he drilled it and actually proved right. And he drilled out 5 million ounces of gold, and there's still upside. There's still, it could even be much larger than that. But we're not drilling it. You don't really need more than 5 million ounces of gold. That's a lot of gold.
Yeah.
It's probably if not the largest, one of the largest undeveloped gold projects in all of Canada, and it's probably in the top 5 or 10 undeveloped gold projects in the world. This is a big mother of a project. It's going to be a 300,000 ounce producer annually over a life of mine of about 12 years. And that's just based on the known resource. And we think there's upside. So we think it's going to be producing even beyond that. And of course, Goldland, where the company is currently still drilling, and will continue to drill a couple million ounces there so far, with blue sky, with upside. Cameron, they're just getting land access and permitting completed over the next few months. Hopefully start drilling there. By the end of the year, Hope Brook, they put some holes in there last year. They're just looking at getting ready to drill later this year as well. And Pickle Crow, another one, very short-term producer. It's got a mill on the ground. It could be a small producer within a reasonable period of time if the company wants to go down that path. We're just evaluating the likelihood of doing that. So there's 5 assets there out of the 25 that contain, well over 10 million ounces of gold combined between the 5 of them. And I believe that each one of them are going to be producing mines in the next 5 years.
Yeah, that's super exciting stuff, especially on the production side for Springpole. How long before that actually kicks off and the production starts? And what are some of the other upcoming milestones and releases of information around that? Yeah,
mining is it takes time. First, of course, the old saying, I guess it is, or maybe the rule of thumb, not necessarily the old saying, but from the point you first discover the ore body to the time you could actually expect it to be producing is about 10 years. And in the case of Springpole, it's a lot longer than that because it was discovered just as the market was collapsing. They came out with their discovery numbers of the 5 million ounces back in 2011, just when the market was collapsing. So between 2011 or 2012 to really 2017, not much really happened there, because we took it out, we bought it in 2016. And now we're starting with all the permitting, which could have started back in 2012. So we've lost that 5 years as a result. It wasn't us that lost it. It was, the predecessor company, obviously. But now that it's under our umbrella, we're now going through all that permitting. In Ontario, it's not that difficult, but it does take time. It's a couple-year process. You obviously need to have the communities on side, and you have to follow all the environmental regulations and so on. And if all goes well, I would hope to see ground break within about 3 years potentially.
Okay.
Maybe if we're lucky, it could be a little bit sooner than that. And then it'd probably take a year or so to build the mill. It's going to be a monster mill, and then it could be in production within maybe 5 years. Seems like a long time, maybe to some investors, but for me, I'm super patient. To me, that's just a normal investment. People that invest in this sector should be prepared to own some of these companies for long periods of time. And that's how you, in my view anyways, and I've done it extremely well, that's how you make 3, 4, 5, 10 times your money, by buying these good quality companies, but holding on to them. I think what happens in this space a lot is that the retail investor, they get caught up in the hype, and they buy these stocks when they're running, and then all of a sudden, the metal price starts to go against them. And next thing the stock is down, 50, 60, 70, 80, 90%. And often they decide to sell. And quite often, in some cases, it's legitimate. Maybe the fundamentals have changed. Maybe the asset's not as good as people hoped it was. Maybe management has changed or something fundamental has occurred. But in some cases, just because the stock is down substantially, it doesn't mean the company or the asset is not any good. And that's when I love to deploy my money, because when I see that occur, and that's exactly what happened back in 2014, 2015, when I put this portfolio together, is those kinds of valuations.
And that was going to be my next question too. As this is unfolding and growing, do you continue to buy shares in the open market? And just in general, what's your philosophy of management that purchase shares in the open market? Is that something that potential buyers should look at?
Well, yeah, I think that, I'm on record stating that, investors, first of all, they should look at management teams. That's your first criteria in buying any investment.
Yep.
I don't care whether it's in the mining sector or whatever sector, they're all the same. And if the management team has had, successes in the past, have built big companies, have created wealth, and they're trying to do it a second or a third or fourth time, these are management teams that investors should pay attention to, because this industry is pretty risky, and you can lose a lot of money by following hype and story stocks, and just because the stock is up, people start chasing it. Look at Bitcoin. People chased it all the way up to $20,000, and I don't have a view on Bitcoin, but I'm just saying that that was hype, right? And then people get their heads handed to them. People lose a lot of money, and I just hate seeing that. So if investors would first go onto the websites, look at the circulars, and a circular is a document that is prepared annually by every public company. It's mailed to all shareholders, and it's got all the information in there. It's called an information circular, and it's got everything in there about the insiders. What they get paid, how much stock they own, how much stock options they own. It's got everything in there, and they're quite interesting documents. Go and have a look at the circular. Make sure that the team of management, including the board of directors, are substantial shareholders, right? And it's one of the first things I do. And if they don't own stock, if they don't have any skin in the game, then why would I put my money? Why would I buy stock?
Right.
If they're up on a stage talking about all the wonderful things about their company, why the 200 people in the room should quickly go buy their stock or his stock, and he doesn't own any. Like, it's just, to me, it just doesn't make sense. My first question to him would be, why don't you go buy some? You go buy some. I'll follow you. I'll buy after you. A lot of these guys just simply don't own stock. So I'm one of the largest shareholders of First Majestic Silver. I'm also one of the largest shareholders of First Mining Gold. I've been buying stock in First Mining ever since it went public. I don't exactly know how much stock I bought. I'd have to go back and look, but I've probably bought more than 5 million shares in the open market over the last couple of years. And my last purchase was about a month ago, I think it was. So all the insider trading is published. It's on the internet. People can go find it. It's not that difficult to find. I've never sold a share of either company. So my position in both companies has always gone up. Virtually every year, my position goes up. And I think that's very important. It's as a CEO of a company or a chairman of a company, I find it disgusting that these types of individuals in these types of senior roles can actually sell their shares, when they're out there promoting to people to buy them. I have a fundamental problem with that.
Yeah, it almost sounds like an Enron deal, right? Where folks are telling people in the company to keep buying the stock, and the company's going great, and meanwhile they're selling it themselves, right? So no, absolutely, you've got to eat your home cooking, as they say. And then the other thing I think that might be of interest for my listeners too, because this is a fascinating space, and I've had Doug Casey on the show as well, talking about it a little bit. But what are, in terms of evaluations, if they look at it and look at some of the report and some of the prospectus that are out there, what are some of the things that they can look at? I know that there's different ways of looking at upside potential or potential upsides. As far as valuations, what some advice can you give to my listeners regarding that?
Well, stocks, well, not just stocks, but even commodities, pretty well anything that trades on the public markets is priced due to sentiment. If there's negative sentiment towards something, it's going to be priced lower, obviously, and then vice versa. Obviously occurs, and we're seeing that with companies like Tesla, who's never made a dime, trading at pretty substantial market cap, and there's many companies like that, of course, but so you need sentiment on your side. It's if you're buying a mining stock, sentiment's against us a little bit, because there's just so much money being made in the U.S. major equity markets that why, if you're an institution who's making dollars off of Netflix, why bother going and buying some gold stock?
Right.
So it's that kind of has to change, and if you go back to 2002, really the mining sector really took off after the Nasdaq cracked, right? The Nasdaq hit to about 5,000. I think it was March 11th, 2000, I believe the date was, that the previous high on the Nasdaq, and from there it was all downhill. And by 2002, the money started to dramatically start leaving that sector, and it started looking for other sectors to invest in. And the mining sector, or the commodity sector, was one of the areas that money went into. So we had a 10-year bull run, which was a lot of fun. From 2002 to 2012, a lot of people made a lot of money. And now we've been in this 5-year bear market, basically, which I think we're climbing out of. I think the last 12 months has shown us that we're at least setting a nice base here, and the worst is behind us. But I still do think that we need to see the institutional investor come back to this market to really get it going up to the levels that it deserves to be at. And, stocks like First Mining Gold or First Majestic Silver or others, mining stocks is just right across the board, can perform extremely well. And you don't need the metals to move that much. If you go back to 2016, First Mining was $1.30, went from 30 cents all the way up to $1.30. And we had First Majestic Silver go from around $4 or $5, I forget the low exactly, but and it hit $25, in 6 months. So that's a pretty dramatic move, and these kinds of moves are driven by sentiment, and that's when these institutions come in, because they're just so big, and the mining sector is so small that you don't need a lot of institutional money to come into this market to drive it higher. That's what I think we'll see again. And I think we're going to go into another very long, extended bull market. I think we're going to see, triple-digit silver, which, it sounds silly. I know I get called a quack by even saying such things. When you're trading at $16.50 silver and I'm calling for $130 silver, it sounds almost impossible. But nevertheless, at $10,000 gold, or pick a number, $5,000 gold, it doesn't really matter. But we're going to see a lot higher gold prices. We're going to see a lot higher silver, copper prices over the next 5 years, and that's going to drive the mining sector. And that's why I'm buying. That's why I put together First Mining Gold, and that's why I'm buying this asset for First Majestic Silver, and that's why we're developing these gold projects, because I think we're at the beginning of a brand new cycle that's going to be pretty exciting.
No, that is super exciting. And there's a report for my listeners that they can go and download at cashflowninja.com/first mining to get more information on this. Now, a core message in our show is to leave our families, communities, and the world better than we found it by passing down a mindset, values, and principles to future generations, not just money. So if you cannot pass on any money to future generations, but we're only allowed to pass on 3 principles to them to build wealth and achieve happiness and success, what would they be?
Well, I think I covered, when it comes to investing, I think you just, do research, don't listen to me, I don't mind telling people what I do, but my risk threshold is probably a lot higher than most. So, and I'm used to investing in this space because I've been doing it for a long, long time. Yep. I would implore investors that want to have exposure in the mining sector to really read the information about the individual company, look at the management teams, and put a phone call into the company, like phone them up and see who answers and see what kind of questions do you get when you ask them questions, and try to build a relationship with the company on the phone, and get that comfort level first, right? And it doesn't matter if it takes you 2 or 3 months worth of due diligence. The stock will still be there, so don't rush into making an investment would be number one, and try to be patient, because the markets are very volatile. They go up and down, and just because the stock is down, don't necessarily just go and sell it just because the stock's down. Don't buy high and sell low, because that's the wrong thing to do. Always try to base your. You have to ask yourself, and this is what I tell people: ask yourself when you look at your portfolio, would I buy, sell, or hold today? So, if it's a buy, it doesn't matter if you bought the stock at $1 and it's now 30 cents, which hopefully doesn't happen, but it could, and you still at 30 cents are as excited about the company, then why sell it? But just because it's down, it's silly. You could just make the decision to hold it, or maybe buy more, accumulate, or average down. But or if the fundamentals have dramatically changed, the CEO's quit, or something fundamentals gone wrong with the asset, and the stock's at 30 cents, it might be the best decision to sell it, right? Because maybe it's going to go bankrupt. You don't know, right? So these are the kinds of things investors need to pay attention to their portfolio. This is not like buying IBM. These are junior companies that can change a lot in very short periods of time. Investors need to know that. So that'd be on my investing. Hopefully, I didn't answer that question too long, but from a personal level, I think and this is where I'm not very good at. I don't take enough time for myself. I'm a workaholic, and people around me, always are telling me I should take more time off and take more breaks and so on and so forth. And I think that's, and I'm really not good at that. So I think my advice to people would be the same. Try to take care of yourself. Exercise and go on vacation and stuff like that. And I should tell myself more that same piece of advice. Yeah.
Absolutely. Thank you for sharing, Keith. Keith, this has been a pleasure connecting with you and having you on. And thank you for coming on the show and sharing your knowledge and your journey and providing so much value for my listeners. Where can my listeners reach out to you? Where can they learn more about you? Connect on social media. I know we're making a report available for them at cashflowninja.com/first mining. But where else can they reach out to you?
Sure. Well, I do have a Twitter account. It's Keith_Neumeyer. I just, it's mostly just stuff that interests me. I news releases, of course, but, variety of articles on the industry I pass on and so on. And of course, the websites, firstmininggold.com and First Majestic Silver, or pardon me, just firstmajestic.com. Go have a look and, read the PowerPoints and, read the information. And if you want exposure in this sector, just, make sure you do your work and do your due diligence.
Absolutely. Thank you so much again. Life settlement investments have allowed financial and banking institutions to not only buy their equity contractually, but also diversify their capital from any economic, market, and geopolitical risk. It's been part of the billion-dollar blueprint followed by institutional investors. And if you're an accredited investor, you can also now participate in this vehicle with enormous growth potential. You can watch an informational webinar presented by one of the premier organizations providing life settlement investments, Penumbra Solutions, at cashflowninja.com/life settlements. Thank you for joining me again on the Cashflow Ninja. Thank you for all your support. You rock. If you like what you hear and appreciate what we're trying to build here at the Cashflow Ninja, please subscribe, rate, and review our show on iTunes and share our show with family, friends, and your network. If you're not a subscriber to our newsletter, you can sign up for our newsletter at cashflowninja.com or text Cashflow Ninja to 443 222. I'm also posting daily videos on Facebook and YouTube and will live stream weekly starting May 2018. To make sure you don't miss any of the live streams, please like and subscribe to my Facebook and YouTube platforms. I'm also dropping content on Instagram daily. Be sure to follow us on Instagram to get in on the action. I want to thank you for spending your most precious resource with me today, your time. That's our show for today. Until next time, live a life of passion and purpose on your terms. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.